As of this moment, the live market price for Bitmine Immersion Technologies under the ticker BMNR on the NYSE American stands at $29.35 USD, marking an intraday decrease of $0.43 or approximately 1.44%. While a 1% dip might seem like a quiet day for the broader market, in the world of high-beta crypto infrastructure, this movement is the subtle vibration before what many are predicting could be a massive shift in how Wall Street treats digital asset treasuries. While most traders are currently fixated on the price of Tesla stock or the latest quarterly guidance affecting Apple stock, a much more complex story is playing out right here with Bitmine. You might expect a company with Immersion Technologies in its name to be a simple hardware play, a group focused on selling cooling tanks to data centers. But the reality is that Bitmine has quietly transformed into the single largest public Ethereum treasury on the planet, holding over 4 million ETH. That is more than 3.3% of the entire global supply. When you look at that $29.35 price tag, you aren't just looking at a mining operation, you are looking at a massive leveraged bet on the future of the Ethereum network. And right now, the market is struggling to decide exactly how to value that kind of concentrated power. The tension between expectation and reality here is where the smart money is currently living. Most people who look at investing sites or use an individual brokerage to find growth stocks expect Bitmine to act like a typical Bitcoin miner, sensitive to electricity costs and hash rate difficulty. The reality is that Chairman Tom Lee and the team at Bitmine have shifted the goalposts entirely. They aren't just mining, they are executing a strategy they call the Alchemy of 5%, a push to own 5% of all Ethereum in existence. If you use Fidelity or Fidelity Investments for your long-term planning, you know that diversification is usually the name of the game. Bitmine is doing the exact opposite. They are concentrating. They have essentially become a bridge for institutional investors who want Ethereum exposure but prefer the safety and regulatory clarity of a Fidelity brokerage account or a Fidelity trading platform rather than dealing with the complexities of private keys and digital wallets. Looking at the recent trading volume, which has been averaging around $1.7 billion daily, Bitmine has actually climbed the ranks to become the 66th most traded stock in the United States. Think about that for a second. It is currently seeing more daily liquidity than some of the massive blue-chip names you'd find in Schwab Intelligent portfolios. This liquidity is a massive draw for institutional players who need to be able to enter and exit positions without moving the needle too much. We have seen significant activity from names like ARK's Cathie Wood and Founders Fund, suggesting that the smart money is treating BMNR less like a penny stock and more like a core piece of the new financial infrastructure. This is a far cry from the retail-heavy hype cycles we often see on the Robinhood app or among those looking for quick online investing tips. The stock's journey over the last several months has been nothing short of a roller coaster, hitting a 52-week high of $161 before pulling back to this current $29 range. For those practicing self-investing or looking for investment help, that kind of drawdown is usually a red flag. But if you look deeper at the reality of the balance sheet, the company recently reported combined holdings of crypto and cash totaling roughly $13.2 billion, with a market cap currently sitting around $12.5 billion. The stock is actually trading at a discount to the net value of its assets. This creates a fascinating arbitrage opportunity. Usually, you pay a premium for the management and the secret sauce of a company, but right now, you can effectively buy Bitmine's Ethereum for less than the market price of the tokens themselves. This is the kind of discrepancy that professional traders using an interactive broker's platform or interactive broker's stock trading tools look for every single day. Now, let's talk about the actual business behind the treasury. While the ETH holdings get the headlines, the immersion part of the name is where the operational efficiency comes from. Traditional air-cooled mining is loud, dusty, and incredibly inefficient. Bitmine operates facilities in Texas and Trinidad that use dielectric fluid to submerge the hardware. This allows them to overclock their machines, getting roughly 30% more power out of the same equipment while also extending the lifespan of that hardware because it isn't being hammered by the Texas heat. This operational side provides the cash flow that helps them fund more ETH acquisitions. It's a self-reinforcing loop. They mine, they earn, they buy, and they hold. For anyone using SoFi Invest or SoFi Active Investing to build a crypto-adjacent portfolio, understanding this hardware advantage is key to understanding why Bitmine hasn't just faded away like other small-cap miners. The institutional footprints here are getting deeper. When you look at Fidelity mutual funds or Fidelity ETFs, you see a slow but steady migration toward digital asset exposure. Bitmine is positioning itself to be the primary vehicle for that migration. Unlike NVIDIA stock, which is a bet on the hardware used for AI and mining, BMNR is a bet on the network effect of the blockchain itself. They are currently preparing to launch something called the Made in America Validator Network, or MAVIN. This is their staking solution. Instead of just holding the ETH and letting it sit there, they are going to put it to work to earn a yield. Imagine if you held a massive amount of gold and the gold suddenly started paying you a dividend just for owning it. That is the goal for 2026. This move from a passive holding company to an active participant in the Ethereum consensus layer is a massive transition that most of the market hasn't priced in yet. If you are currently holding any crypto-related stocks, I want to hear your strategy. Comment below how many shares of Bitmine Immersion Technologies you currently hold, or if you are looking at other miners instead. It's always interesting to see how the community is positioning itself before these major shifts. From an investment perspective, the risks are clear. Bitmine is a high beta play. If Ethereum takes a massive hit, BMNR is going to feel it twice as hard. The stock has been known to drop 10% in a single session on relatively little news, simply because of the liquidations happening in the crypto markets. We saw this in October during a massive liquidation event that wiped out billions in market value across the board. But Tom Lee has been vocal about the fact that these V-shaped recoveries are common in this space. He's betting on a 2026 supercycle, driven by network upgrades like the Fusaka upgrade that is aimed at making Ethereum faster and cheaper to use. If that thesis holds true, the current $29 price point might be eventually seen as a historic entry floor. We also have the annual stockholders meeting coming up on January 15th at the Wynn in Las Vegas. This is going to be a major catalyst. They are looking to approve a charter amendment to increase the number of authorized shares, which usually signals that they are getting ready for more acquisitions or perhaps a major strategic partnership. If you are using Invest Online platforms or checking your Fidelity mobile app for updates, that's the date to circle on your calendar. It will likely be the moment they provide the full roadmap for the MAVIN staking launch. When we look at the broader landscape of online investment, the choice often comes down to direct ownership versus equity exposure. Some might argue that you should just buy the tokens directly through the Robinhood crypto feature or a specialized exchange, but Bitmine offers something that tokens can't: a management team that is actively looking to increase the ETH per share for its investors. They are essentially running a corporate treasury with the aggression of a hedge fund, but the transparency of a public company. This is why you see it appearing on the radar of SoFi stocks and SoFi ETFs more frequently. It fills a very specific niche in a portfolio that needs aggressive growth. For those managing their own individual brokerage accounts, the question is whether you believe in the infrastructure or the asset. Bitmine gives you both. You get the Texas-based data centers that are essentially the real estate of the digital age, and you get the world-class treasury. Most people think of Fidelity Wealth Management or Fidelity IRAs as the place for safe, boring bonds, but even those traditional pillars are starting to see the value in companies that can bridge the gap between old-world finance and new-world assets. Bitmine is that bridge. They are taking the capital-raising power of the NYSE American and turning it into a massive stake in the future of decentralized finance. The recent price action, showing a 1.44% slide to $29.35, is really just noise when you consider the scale of what they are building. The daily volume of 21 million shares shows that the interest is there, even if the price is currently consolidating. We are seeing a classic battle between short-term traders who are trying to time the crypto winter and long-term believers who are looking at the $13.2 billion in assets and wondering why the market cap is only $12.5 billion. In any other sector, that kind of discount would be a screaming buy signal. In crypto, it's just another Tuesday. But for the investor who understands the underlying technology, the immersion cooling that keeps the machines running when others melt, and the staking network that turns tokens into productive assets, the reality far exceeds the fearful expectations of the general public. As we wrap this up, remember that the goal here